Street Week with Louis Rukeyser is made possible by the Corporation for Public Broadcasting and by the financial support of viewers like you. By the travelers, over 40 million Americans benefit from our insurance investment services and managed health care. The travelers. By Financial Guarantee Insurance Company, helping to provide investor liquidity. FGIC AAA Municipal Bond Insurance, tomorrow's security. And by Prudential Securities, the knowledge and resources you need to help make intelligent investments. Rock solid, market wise. Produced Friday, October 18. Our panelists are Frank Cappiello, Michael Holland, and Bernadette Murphy. Tonight's special guest is Maryann N. Keller, Managing Director, Furman Selz, Incorporated.
Good evening, I'm Louis Rukeyser. This is Wall Street Week. Welcome back. Well, this was the week when not one but two baseball teams accomplished a feat never seen before in either league. They went from worst to first in a single year. If the Minnesota Twins and the Atlanta Braves can move from league doormats to league champions in just 12 months, why, folks, there may be hope for all of us. Even, say, the American economy, which continues to draw more catcalls and boos than championship cheers. This was a week of further strikeouts. Industrial production, which had been one of the few improved performers since last spring, has been horse-collared for the past 2 months. The auto industry, beginning its new model year, barely got the bat off its shoulders as sales slipped nearly 10% below last year's levels. Housing starts, which have been showing some vague signs of life, slumped in September. And even the 1991 old reliable of lower inflation disappointed the crowd and terrorized the fans in the bond market by coming to the plate with the largest one-month price increase since January. Worst to first by the fall of 1992 would certainly please the Bush administration. But this week, that was looking like a formidable challenge indeed. But even as a housing economist was saying it was time to push the panic button, and as the White House was so concerned that it appeared finally to be reconsidering its 1990 cave-in on higher taxes, the stock market seemed to be playing in another ballpark entirely, one in which it had already gone from worst to first in a single year. Despondent a year ago, after tumbling 700 points in the wake of Saddam Hussein's invasion of Iraq, Wall Street has seen since then a string of home runs and shutout pitching that has qualified 1991 not just for the Stock Market World Series, but for the Hall of Fame. Indeed, as we meet tonight, the Dow Jones Industrials have gained more than 130 points in the last 7 sessions alone and stand at an all-time high. Take that, all you error-plagued bears. Meanwhile, in perhaps the most ambitious worst-to-first scenario of the year, Secretary of State Jim Baker, happily removed from raising taxes, was seeking to build on the demise of Arab unity in the wake of the liberation of Kuwait to move the perennially deadlocked Middle East to a genuine peace table at last, as most of the world has long hoped but seldom believed possible. And if that worst-to-first scenario succeeds, why, someday, folks, there may even be hope for the United States Congress. As the Twins and the Braves have so triumphantly demonstrated, you never know. One thing we do know is that many millions of Americans are fascinated by cars. So tonight we'll be taking a look not only at 3 of the hottest new models that dealers hope will tempt you to become a buyer soon, but we'll be talking with a woman who has given us outstanding guidance on the auto industry in years past, and to whom Detroit may finally be listening. But first, let's visit the place where, whether the economic news is good, bad, or indifferent, the party just keeps on building, and see what actually did happen in Wall Street in the week just passed. The Dow Jones Industrial Average scored its 12th biggest weekly point gain ever, ignoring a second straight sell-off in the bond market and setting records on Wednesday and Friday to end at 3,077.15, up just under 93.5 points for the week. The broader market indexes failed to join the Dow in record territory tonight, though the over-the-counter composite did set 2 new marks earlier in the week. 3 of our L's moved in 3 different directions. Chief Elf Ralph Acamplora turned bullish on the next 6 months. Stan Weinstein upgraded to neutral, and Michael Metz down-ticked to bearish. The net change was a 1-tick improvement to an overall +1. Well, technical market analysis may not be an exact science yet. Meanwhile, with other major markets little changed, we got a new insight, far from the slime in Washington, into what American women really may be thinking these days. Woman's Day magazine asked 50,000 American women whether they'd rather be rich, beautiful, famous, or younger. Fully 71% said they'd take the money and run. Frank Cappiello, what can you say tonight that will help those women achieve their dreams?
Well, I guess to eat right and stay with the stock market, Lou.
You get rich by eating right? I didn't know that. What do you think of this market?
Well, I think the market's been surprising in its resistance to downtrends. If you look at what's happened, the weaker the economy gets, the higher the market goes. And of course, that's the hope for another cut in the discount rate. And I think the housing start report today that indicated that we were down about 2% was a real plus, because it means the Fed will have to continue to loosen. But I also think that earnings are better than expected, though. Many of the earnings coming through are surprisingly good. We've had some bad ones, but as a rule, they're better than expected.
How much more help can we expect from lower interest rates?
I think we have one more shot out of the Fed's locker. Probably one more cut in the discount rate, or maybe a cut in the Fed funds rate, the rate that the banks charge to loan money to each other. And so maybe we're talking about a 50 or 75 basis point drop, or a half to 3/4 of a point on short-term interest rates, and that's it. And after that, we have this long valley that we have to cross in terms of higher earnings.
Is there a danger that the bond market, which is nervous, as we saw this week, might take a further cut in short-term rates as inflationary, and perversely long-term rates might go up?
That is a groundswell of opinion that's developing among some people on the street. They're saying that the Fed has done so much stimulating, lowered rates so much, that we're going to pay the penalty next year. 6 or 8 months from now, inflation will start to rise, and that's why the bond market's so jittery. I don't believe that's the case. I don't think the Fed has really done that bad a job, and I think you really have to jumpstart this economy because of the banking situation. It needs a lot more help.
You've been optimistic right along on this move. You think we're still have a distance to go?
This smells like a big bull market, Lou. I think this bull market really began last October. This is not an extension of the bull market of 88, 87, 88, or 82. This is a new bull market, and I think we can look at this well into 92 and probably early 93 before we get a real setback.
Michael Holland, are you that optimistic?
Very optimistic, Lou, in part because of what Frank was talking about. The bond market vigilantes have done their job. I think every whiff of inflation we're getting, they are extremely vigilant. They're taking the bond market down every time they get any sense that there's any danger whatsoever. With inflation at rest, therefore, I think the stock market has a wonderful underpinning to go up to substantially higher levels. I would, however, agree with Michael Metz, whom you referred to before, that short term you would expect some sort of a reaction. It's come a long way, as you point out, 170 points in a very short period of time.
How much of a reaction would you expect?
Most people who are looking for reactions talk about 10%, so it probably won't happen, but a good 5% reaction would be very much in line with a good bull market.
What should people do, then, if they accept that analysis? Should they be selling stocks here?
No, because presuming that Frank is right on the money, that we're in a very major bull market, you buy the bull market.
That's your presumption, not mine.
I listened to him a long time, I'll bet with him. But we buy bull market corrections, you sell bear market rallies. I think we buy the corrections here.
So if they go down a little bit, it's a chance to buy some stocks.
Absolutely, or add to them.
Bernadette Murphy, as the only elf here present, would you tell us your technical view at the moment?
Well, I agree with partially with what Frank has said and Mike. I think that this market probably is going to go higher. I'm not looking for an extraordinary move from here. Maybe 3150, could be 3200. But I do think the bull market is with us until 92, maybe early 93. However, right now, I think next week's action is going to be important. Frequently in the post-option expiration week, it can be a negative week. To show strength here, it would be very important that the market go up next week rather than go down. We had the market up 24 points today, but we only had 151 more advances than declines. That rings a caution bell. Also today, the CRB index broke out, and it means it's starting a new bull trend for the CRB index, which does show...
That's commodities.
Commodities, which, I'm sorry, I should have explained that, which means that inflationary psychology is starting to reignite. And from the looks of it, it could be with us for a while.
Given your caution, are there areas that you see the market moving to, areas where you would be buying, whereas you might not buy in other areas?
Oh, yes. The oil area and anything related to oil, I think, is a good investment here. There's an old saying, you buy the oils in May and you sell them in December, but it looks to me as if this move might last longer than that.
Is this because you see this whiff of inflation in the market?
Well, partially that, and also there's the theory of colder winters coming. There's a lot of theories, and a decline in the production in Russia, that other countries may not be up to snuff yet in their production. So
I get confused on this. Would you educate me? First I hear about global warming, and then I hear about colder winters. Now, what should I really be looking for at this point?
Well, it's the volcano in the Philippines, and they're not certain as to the effect on the climate.
I know some analysts I'd like to put in that volcano. Now, this is the point in the program when we normally pause for a round of viewer questions, but tonight instead we're going to go around the block for a little extra talk about cars. The one purchase after a house about which most Americans have the most questions. But we'll soon be back to our usual parking places, so send your most moving money questions along to us here at Wall Street Week, Owings Mills, Maryland, 21117. That's Wall Street Week, Owings Mills, Maryland, 21117. Now, before we meet tonight's special guest, a leading expert on the auto industry, let's take a look at 3 of the hottest new cars in the showrooms this fall, as we check out the latest models which automakers hope will inspire you to wheeling and dealing. A new age theme pervades the advertising, even for this sporty Mazda MX-3 GS, which lists for $13,800. The company claims its core clientele is found among what it terms up-and-comers, which it defines further as, and believe me, folks, I'm just quoting here, young, predominantly bachelors, invariably active, who direct part of their resources toward activities rather than material possessions. The typical up-and-comer, we are told by the Mazda Flax, is interested in owning enjoyable and sporty automobiles, yet is a careful spender. He's also apparently gregarious, up to a point at least, since this hatchback coupe is sold as what the company calls an acceptable 4-seater. This more conventional family sedan, presumably for those who have abandoned that supposedly active single life, is a 1992 Ford Taurus, and it has undergone the greatest redesign since the model's introduction 6 years ago. Ford had high hopes for this revamping of what has been one of the world's top-selling family sedans. The new Tauruses start around $15,000, but this GL, when equipped as most owners prefer, costs about $19,600. Also a family sedan, especially if your family happens to be named Rockefeller or Trump, is this new S-Class model from Mercedes-Benz. And I know you'll want several in assorted colors when I tell you that this 32-valve V8 500 SEL can be driven home for a mere $93,500, plus taxes and such, of course. But if that's not enough power for you, the same 123.6-inch wheelbase can be fitted with a 12-cylinder engine, which magically transforms it into a 600 SEL, whose base price hovers at $128,000. I'm sure you'll want to get one for each of the kids. See anything you like? Want to kick the tires? Or would you rather stay home and drive up your net worth with other people's automotive dreams? For some thoughts on that prospect, let's go over now and meet tonight's special guest, Maryann N. Keller. Maryann, welcome back. Always a pleasure to have you here. Maryann Keller has been calling the turn on the automotive industry, often to the distress of its executives and apologists, for the past 20 years. And she is certainly in the driver's seat among all auto analysts, of whose society she is the president. Currently parked at Furman Selz, she has long been a favorite of our viewers and is tonight making her 6th appearance as my guest on this program. Maryann, you've long been an outspoken and, as it turned out, extremely prescient critic of the U.S. auto industry. Are you equally critical still?
I think Detroit's made a lot of progress in the 1980s, but unfortunately I guess I'd have to fault them for wasting opportunities. So on a relative basis, the Japanese, unfortunately, are still ahead of them in product development skills, in productivity costs, and even to some extent in quality.
Auto sales lately have been, to use the technical term, crummy.
That's generous.
When do you see them picking up?
I would have thought they would have shown some signs of life, but frankly, a 5.5 million selling rate for early October is just beyond what I was thinking we would have. Right now, I think everyone sees a recovery pushed out into 1992, and no one's expecting a big deal in 92 either.
Are the foreign makers doing better than our American makers?
Yes, they are. That's not unusual. Normally, foreign car buyers are wealthier than domestic car buyers, so there's a cyclical effect in here where the import share typically rises in a recession. But unfortunately, we've been living now with a 20-year trend in foreign penetration rising, so there's a little bit more than a cycle at work.
What is the import share now?
The import share varies a little bit from month to month. It's right now in the mid-30s.
Do you think it's peaking, or do you see it continuing to grow?
I guess that I would say that it's going to grow. It's not going to grow as fast, but I think troublesome to Detroit, the imports are now beginning to sell larger cars, so every unit that they sell in the 1990s will have a greater impact on the profits of Detroit than it had in the 80s when they were selling subcompacts.
Let's go over some of the lessons that Detroit may or may not have learned. Are American cars, in your view, of better quality?
They have significantly improved in quality. Most of the surveys would say that they're not quite at the standards of the Japanese, but the differences between them and the Japanese today are very small compared to the 10 defects versus 1 defects that we had 10 years ago.
Is the problem then price?
Nope. Price is set by the market. And if a car is wrongly priced, the next sound you hear is a $2,000 rebate being put on it. So that's not the issue. The issue really for Detroit, I think, is productivity.
Does it take us too long to make the cars?
It takes very long. It takes too many man-hours to build a car, and that's not the fault of the hourly worker. It's the fault of the designer and the engineer who, in the first place, created that automobile. Toyota can build a car in, say, 15 man-hours. Ford can build one in 20. General Motors, on average, takes 40.
We keep talking about the big three of American car makers. 10 years from now, will we still have three?
Well, actually, if you're going to say big three today and you're referring to the car industry, you're talking about GM, Ford, and Honda.
Is Honda still a Japanese company, or is it partly an American company?
I would say Honda is very much of a world multinational company.
I never want to visit the auto hospital without asking what the prognosis is for Chrysler.
Chrysler is past its immediate cash crisis, and as long as we have a recovery in 92, even a modest one, the next major issue for Chrysler is going to be whether or not the cars they bring out in the fall are a success. If they're a success, then Chrysler probably, the next time we'll reconsider Chrysler and its future will probably be in the next recession.
Given your slightly tempered but still very reserved outlook for this industry, are there any of the stocks you'd buy?
Not the auto stocks. They've come down a little bit, actually, in the last couple of weeks because we've been getting strong hints from the auto industry that the losses are going to be bigger than we expected them to be, and that's pulled the stocks down. So they're getting closer to levels where I'd be interested in buying them, but they're not quite there yet. I'd like to see what the third quarter looks like, and I guess I really would like to see a little bit of evidence that people are going to buy a few more cars.
The classic view of this industry was that you bought these stocks when the news was terrible. The second part is true.
Ironically, that's exactly what people did. In 1980, GM was $20 a share. Today, GM is $38 a share. So in this cycle, the stocks never really got beaten up and as cheap as they did the last time. People were so anxious to buy them on the bad news that they never let them get cheap.
If people are keeping their cars, then would you buy the auto parts companies?
Not the replacement parts companies. That theory about fix them up because you're not buying a new one, unfortunately, doesn't work. What people do is sit on their wallets, and they don't fix them up either in the middle of a recession.
Are there any securities you cover that you favor?
Oh, sure. I think that the auto industry is a very varied industry, and there are a lot of things happening in it. For example, you're probably aware of the fact that every auto company is falling over the other auto company trying to prove that their cars are safer than somebody else's. I mean, this is the new theme. And there are certainly companies that manufacture products related to auto safety, which are very, very important. A little company called Gentex, for example, makes electrochromic mirrors, one of which was in the Mercedes. It's a company that actually sells to the Japanese, to the Europeans, and to American companies. So there are opportunities, but I think you have to look around and search for them in the industry.
Something to reflect on.
Yes.
Well, we have a lot of viewers who have held for a long time stocks like GM and Ford through thick and thin. Would you tell them now to dump them?
No, I wouldn't say to dump them. The yields on them are very good, and there's a little downside risk, certainly. If you don't think that there's going to be a recovery next year, you couldn't rule out entirely the possibility of another dividend cut. That's not my forecast right now, but I don't think you could rule it out entirely. But yielding 4.3% against what they would earn in a savings account or in a money market fund today is not that bad.
Let me turn you over to three daredevil drivers, starting with Frank Cappiello.
Thank you, Lou. Maryann, General Motors has been a puzzle. Here we have them losing money in North America, and yet in Germany, in their subsidiary, they're making $2 billion this year, $2 billion last year. What are they doing different in Germany than they're doing in the United States?
Just about everything. It started off with the German subsidiary doing very badly 10 years ago.
That's Opel.
Well, it was Opel. It's all of Europe, really, that's so spectacular. First, they created completely new, absolutely appropriate products, to the point where General Motors today is considered a styling leader and an engineering leader in Europe. They've improved their marketing. They've improved their distribution. It's a well-managed company. It's a very lean management as well. The headquarters staff in Zurich is only a couple of hundred people, and you consider the monolith that exists in Detroit versus Europe, you realize why everyone's close to the market and gets things done fast.
Maryann, you mentioned safety as one area that you're looking to maybe some investment opportunity. Are there any other technological changes you see going on in the auto industry where there might be some investment opportunity?
Well, there are quite a few things that are going to happen to the car, some of them prompted by regulation, some of them just prompted by the explosion in electronics that are going in the automobile. One thing that is a difficult one to assess, but certainly is coming, is something like the electronic muffler. I mean, it isn't commercial yet, but it's certainly something for the future because it improves fuel economy. It's a very interesting way of controlling the sound of the engine. You just create a sound wave that is the opposite wave of the noise coming out of the engine. A company like Arvin, for example, is in something of a defensive mode there because they make conventional mufflers, and clearly if we have an electronic muffler, they had better be building that too.
May I go back to the safety factor that you were talking about? Here we have all these companies, one trying to prove they're safer than another. What are some of the innovations in safety that we're going to see?
Well, the most innovative thing that we've seen, which the public has just taken a tremendous fancy to, is the airbag. We're now going to have airbags not only on the driver's side, but on the passenger side. There's some talk about actually putting airbags in the doors of the cars as well, so I'm not sure what's going to happen to the cars inside if there's an accident. I guess you're enveloped in it. But the airbag is probably the most interesting innovation. It's created a whole new industry, which is something that very few people think about as a result of regulation. They usually think of the impact, the cost effect on the auto industry, but sometimes regulation creates tremendous opportunities for investors as well as companies.
Maryann, when I was a kid, long before you were, we never thought about buying anything other than an American car. We aspired to a more expensive American car in families, but we didn't think about buying abroad by and large. Now you have a whole generation that's never owned an American car.
Right.
Are they lost to us forever, to American car makers?
They're going to be a very difficult generation to win back. Baby boomers, I refer to the Japanese auto industry as the baby boom industry because when you think about it, when baby boomers were 20 years old, Japanese were selling small cars. And when baby boomers got a little richer, the Japanese started to sell them sporty cars and bigger cars. And now suddenly we have Lexus and Infiniti. We have the announcement by Mazda that they're going to make a luxury car. Well, guess what? Baby boomers are now going to be 45, 50 years old. And that's the generation that typically spends more and wants more creature comforts and is ready to part with a lot more money on an automobile. And the Japanese have grown up with their market. They're going to be very, very hard to win back.
We only have a few seconds left, but you've been pretty good at looking ahead in the past. What do you think is going to be the hot new car?
Oh, boy, what a tough question. The hot new car right now is the Lexus SC400. the two-door Lexus made by Toyota. That's the really tough one for Mercedes to compete with, unfortunately, for them.
Thanks very much, Maryann. Thanks, Maryann Keller. Thanks for the panel. Hope you'll all be back with us next week. Then we'll take a special inside look at some of the titans who regularly shape our view of American business. My guests will be three authentic media magnates: Malcolm Forbes Jr., Knight Kiplinger, and Mortimer Zuckerman. And we'll turn the pages on those guys for a change. So I hope you'll join us. Meanwhile, this has been Wall Street Week. I'm Louis Rukeyser. Good night.
Wall Street Week with Louis Rukeyser has been made possible by the Corporation for Public Broadcasting and by the financial support of viewers like you. By the travelers, over 40 million Americans benefit from our insurance investment services and managed health care. The Travelers. By Financial Guarantee Insurance Company, helping provide financial strength, security, liquidity. FGIC AAA Bond Insurance, tomorrow's security. And by Prudential Securities, the knowledge and resources you need to help make intelligent investments. Rock solid, market-wise. For a printed transcript of this program, send $5 to Transcripts, Wall Street Week with Louis Rukeyser, Owings Mills, Maryland, 21117. Transcripts are also available to subscribers of the Dow Jones News Retrieval Service. Wall Street Week with Louis Rukeyser is produced by Maryland Public Television, which is solely responsible for its content.
This is PBS.
WETA's local broadcast of Wall Street Week is made possible in part by a grant from the Johnston Lemon Group, parent sponsor of Johnston Lemon and Company.